Governance Committee, because at the first meeting, of chairman and vice chairman are elected. I'd like to start the meeting by reading the webcasting introduction. I would like to remind everyone that this meeting will be filmed live or recorded and uploaded to the internet and will be capable of repeated viewing. Therefore, by participating in this meeting, you are consenting to being filmed and to the possible use of those images and sound recordings. If any public speakers on MS Teams do not wish to have their image captured, they should ensure that their video setting throughout the meeting is turned off and set to audio only. Members and public speakers are reminded to turn their microphones on before speaking and turn them off when they're finished. I'll move to item 2 of the agenda, and as detailed in the agenda, I'd like to seek nominations for chairman for the committee. Stephen. Councillor Heather.
Yeah, I'd like to nominate Councillor John Whitehouse.
Do I have a seconder for that? Councillor Ryan. Any other nominations? Can we vote on that? Agreed? Agreed. Councillor Whitehouse, could I ask you to take the lead, please? And I've produced you a hard copy of a very light agenda.
Okay, well, thanks very much, everyone, for electing me and welcoming to what should be the second, but it's actually the first meeting of the Audit and Governance Committee this cycle. That explains the length of the agenda. For those new to the committee, it's not usually quite as thick as you've had to look through for this meeting. The first item we need to do is to elect a vice chair, and that has to be one of the co-opted members of the committee. So I don't know if there's been any discussion about this beforehand, but we'd only like to nominate a vice chair of the committee. No, it doesn't. No. It doesn't. We just need to... I'm afraid it doesn't come with any perks, but it's apart from sitting at the front of the room and looking at people. I mean, we need someone to nominate one of you.
Chairman, could I make a suggestion?
Yes.
I think you were on the interview panels for both committees. Perhaps
yes.
It would be appropriate if you nominated one chairman, just to put you on the spot as chairman.
Look, for no other reason, sorry, Councillor Owen.
Are we allowed to have a rolling one, as in like they do every other meeting, and then they can both do it and get the experience?
That's not really provided for in the...
unfortunately,
rules.
It's not provided for. It is it is a fresh nomination every year.
Well, it's a really long agenda today, and I don't want to make your life any harder than it is. So if Harry's okay with it, I'm happy to do it, and then we can alternate for next year, say,
perfect.
Which I think is...
That seems very reasonable. So I'm happy to second Harry. Councillor Owen, okay?
Cecil.
Sorry, to second. Is there any other nominations? Okay, in which case you are elected. Please come up and join me here. I think because it is the first meeting and not everyone's necessarily familiar with each other, although I know some of you met each other at training and so forth, it might just be helpful very quickly to go around the room so everyone can say, who they are and what their function is. So I'm Councillor John Whitehouse and I'm a district councillor in Epping.
Cecile Heiberg, resident of Waltham Forest, qualified accountant by trade, internal auditor, and main experience in financial services, internal audit and banking.
Okay, should we go this way round? Oh, you just take the mic off.
Thank you. Andrew Small, I'm the Council's Strategic Director. I'm also the Council's Section 151 Officer, a statutory role associated with making sure the Council's finances are looked after properly. So, good evening.
Yeah, Councillor Stephen Heather. I'm District Councillor for Waltham Abbey South and Rural.
Harry Marway. I've got some experience working in an outsourced investment office, deal with lots of audits, and a co-opted member.
I'm Councillor Michael Owen. I'm a District Councillor for Loughton. In my day job, I work for a bank, hence quite finance heavy. Thank you.
I'm Laura Kerman. I'm a Democratic Service Officer and I service this committee.
I'm Sue Lindsley, a Senior Internal Auditor as part of the Shared Internal Audit Service and the Lead Auditor for Epping.
Sarah Marsh, I'm the Head of Internal Audit.
I'm Chris Hartgrove, Service Director Finance and also the Deputy Section 151 Officer.
Hello, I'm Julia Berry. I'm a Principal Accountant. I'm supporting Chris and Andrew.
And I'm Martin Crowe. I'm the Team Manager for the Corporate Fraud team here at Epping.
Okay, and we're to pick up the people who are joining us remotely as well. Mo and Alec.
Yes, happy to introduce Chair. So Mo Ramzan, I'm Director from Deloitte and responsible for the external audit of the authority's financial statements. Over to you, Alec.
Yeah, hi everyone. My name is Alec Parrick. I'm the Audit Manager from Deloitte.
Thanks very much. Councillor Sunger. Temporarily unable to hear us. And we've got two other colleagues from Therese, yeah.
Yeah, I'm Therese Larson. I'm one of the Democratic Services officers who will attend Teams for these meetings.
Okay, thanks very much. And yes, we'll to include Mr Mitchell as well.
Sorry, I'm Steve Mitchell and I'm the webcaster.
Lovely. We won't do that every meeting, but it's very helpful just for the first one. Okay, are there any apologies for absence, please?
Apologies for absence have been received from Councillor Hadley.
Okay. And are there any declarations of interest that anyone feels they need to make? No declarations of interest. Okay, the minutes are on pages 5 to 8 of the agenda. There's only a few of us who were here at that meeting. Are we happy that they're an accurate record? Yep, everyone's in agreement. Thanks very much. And are there any matters arising from the minutes that anyone wishes to raise? Nope. Okay. So we'll move on to the work programme, which is from page 9. And who's going to introduce this?
Chairman. Oh.
So this work programme sets out these items that are going to come to the committee, which particular dates. It doesn't exclude you having any additional reports or presentations if you require that as part of the audit committee.
Okay, so the work programme itself is set out on page 9. And anyone got any comments or thoughts of things that are missing? Cecil.
I noticed that the council has a new external auditor for the year. Would it be possible to have them come in to a future meeting and talk a little bit about their plans and in particular the quality review results I'd be interested in from the FRC?
I think that'd be an excellent idea and I'm very happy to organise that for a future meeting. Thank you.
Okay, so we'll move on to item 8, which is the external audit update from our previous external auditors, which I'll ask Mr Small to introduce.
Thank you, Chair. I think we've got 3 items actually which are grouped together. So this largely revolves around, or it does specifically revolve around the agreement of our presentation of the statement accounts for 21-22. There's a sequence to it. First of all, I think we'll ask Mo Ramzan from Deloitte to give a Deloitte update first of all. Then to actually present item 10 on the agenda, which is the ISA 260 report, which is essentially the auditor's findings as a result of their audit of the 21-22 accounts. And then subject to the audit committee's consideration of the findings from external audit, the committee will be asked to consider and approve the 21-22 accounts, so subject to any comments that Mo would like to make at this point. So if I may, Chair, I'll hand over to Mo to introduce external audit update at this point in time. Thank you.
Yeah, please go ahead.
Thank you, Chair. So picking up the ISA 260 report on the 21-22 audit, and so I'm looking at page 123 of the pack, which is our key messages in the report. Firstly, I think just to note that we presented the brunt of this report at the last meeting of the audit committee, and at that point I think we were mainly outstanding an updated set of financial statements for us to work through and agree with the finance team, and so I think at this committee we now have the updated financial statements, and so that's progressed. Our status of the audit bullet points note that in terms of concluding the audit, the only main point outstanding is in respect of any potential impact of the land disposal transaction, which is agreed in 22-23, which we're working through as part of the 22-23 audit, but there are a couple of queries just to understand potential for any implication on the 21-22 financial statements in terms of disclosure. So we are just tying those up with the finance team before then being in a position, subject to a representation letter, etc., which is normal routine, to conclude the audit and sign our opinions for the year. And we do note in the report that we anticipate signing unmodified opinions in respect to the financial statements. The other elements within the executive summary, I'll just touch on, mindful of the changes in membership in the audit committee since we reported last. We are also responsible for undertaking work in respect to value for money arrangements, and the directives from the National Audit Office allows, as part of current considerations, to report on those combined for 21-22 and 22-23. So we'll be coming back to the committee at the next meeting to report on those as part of closing out our work for 22-23. At the bottom, the conclusions are set out there, and it cross-refers to other pages within the report, but the key, I suppose, it's the third bullet point, that we anticipate issuing an unmodified audit opinion, no reference to matters in respect of value for money or significant weaknesses that we need to highlight within the opinion. Other details in terms of adjustments that have been discussed are set out further on in the report, as well as any internal control recommendations. The authority has had a chance to respond to those, and the management responses are included in terms of how those elements are being taken forward. So the annual report, annual governance statement, and the financial statements are presented on the agenda are ones where we've fed in our comments, and these have been updated to reflect any changes that were required as part of that. That's all I was going to say in terms of the executive summary. I mean, there's further detail in the report. I wasn't particularly going to propose going through anything further on the basis that we have been through the majority of it previously, but happy to hand back for either any questions on this or presentation on the actual 21-22 financial statements that the finance team wanted to pick up on.
Okay, did people have any specific questions on this aspect before we move on to the statement of accounts themselves? Yes.
Just a few small ones, Mo. I believe you've got a backstop deadline of December, is that correct? I see you're nodding. What's your confidence level?
Okay, so could I park that question and come back to it as part of presenting the audit plan for 22-23? If that's okay, so I'll be covering an element of that off as part of that, and then I can come back on anything further if I don't pick that up in the presentation, if that's okay, Councillor.
Yeah, that's fine. And then a broader question on, given the handover between external auditors, what's the process for the action tracking? You raised a few things and made some recommendations that management have taken under advisement. What happens to those?
So as part of the handover and transition, we will have discussions with your new auditors, and they'll have our reports. And so any aspect will be followed up as that applies sort of going forward will be followed up as part of their work, but certainly from a committee perspective, management can update the audit committee in due course.
Thank you.
Anyone else? Okay, we could always come back to things in the context of the statement of accounts. So, Mr. Small, do you want to continue?
Thank you, Chair. I'm not sure whether this is an appropriate moment, but I mean, for new members of the Audit Committee, I think that it's worth explaining that, yes, we are considering 21-22's accounts. We quite recently agreed 2021's accounts, and probably, we expect to be looking at 22-23 in the next couple of months as well. But this is set in context of a national problem around external audit. I mean, members of the Audit Committee who are standing will be aware there's been a delay in producing producing final accounts for external audit and getting those agreed. This is a national issue represented up and down the country. There was in March, I think, about 640 audit opinions still outstanding at that point in time. Going back multiple years, back into 2018-19, and might have been the latest, sort of the earliest one. And the issue is manifold. It's to do with the complexity of local government accounts now, and the difficulty in gaining assurance, or auditors gaining assurance about some of the elements within there. It's to do with capacity as well. I think there's a real shortage of qualified accountants within the auditing sector, and that's been an ongoing issue. The issues have been well discussed, I think, really, and the government has come up with a solution which is just about to legislate for and bring in, which means that all outstanding accounts will have to be, at least up to 22-23, will have to be concluded by the 13th of December. And that's the backstop date that Cecil referred to. And this is really an attempt to, we can't move forward until we've dealt with everything that historic that's still outstanding, and based, starting with a clean sheet of paper, although really it isn't a clean sheet of paper, because there'll be a series of new backstop dates for forthcoming accounts for up to the next 5 years. So the conclusion, which is necessary, will have ramifications going into future years, and we'll be dealing with this probably for quite a few years to come, one way or another. That said, I think Epping Forest is in a really good place compared to many. I really hope that we'll get 22-23 agreed with our colleagues in external audits cooperation and ours as well, of course. And I think that'll put us amongst a fairly elite group of councils one way or another. But it's, I can talk at length about the reasons which have led us to the position we're in today, really. But I think it's important to stress for the committee's benefit that I don't think Epping Forest is exceptional in any way, shape or form, and actually in many respects is probably further advanced than many. And at that, I'll move on to the 21-22 accounts. And so they are presented. I have Chris Hartgrove and Julia Berry with me tonight, who have done the hard work in terms of putting these accounts together and liaised with our colleagues from external audit, to whom I'm grateful to. Thank you for your work around this. and the set of accounts in front of you essentially is the conclusion of that work, building in the assurance given to yourselves by external audit, and the matters which have been adjusted for and which aren't adjusted are reflected in this final statement of accounts presented to you here. There are two recommendations. If you're satisfied with the accounts as they stand, then you're asked to consider those and approve those. I am mindful, of course, there is one issue outstanding around the sale transaction at North Weald. I think, with your blessing, Chair, I think if the committee is minded to, then perhaps we can agree it, subject to that matter being resolved. And if there is any material recommendations that need to come back to the committee as a result of the conclusion of that audit, then we'll have to bring it back. But hopefully we can agree that subject to that one final issue being resolved. The second recommendation's in there that says the report be recommended to council, or sorry, that this report be recommended to council for agreement. I'm reminded that a couple of years ago the Constitution Working Group made a change to the Constitution to say that the Audit and Governance Committee can approve the accounts themselves without need to referral up to council. So I think we can strike that recommendation out. Over to colleagues for comments or questions.
Okay, it did feel a bit like going back in time reading through the Statement of Council, the references to the coronavirus and special grants and all the rest of it. So it's good that we are finally seeing the audit reach its conclusion, and also that the proposal is an unqualified opinion. But members, any questions or comments you want to make? Councillor Owen.
I didn't quite pick this up in the report, so apologies if it's in here, but you made a comment about the outstanding item, but I thought the sale to North Weald was in the following financial year, which is further on in the next accounts that I see. Could you just, I've probably missed it in the report, so apologies, but could you just explain exactly what that is, because I'm unsure.
One of my colleagues wants to do it for me, but I think the issue is to do with classification of assets and whether the asset in 21-22 was an asset held for sale or whether it was an operational asset. We're having a final conversation with our colleagues in external audit about whether it was actually saleable in 21-22, and I think our assertion is that I think the local plan was agreed on the 6th of March, I think it was, or the 13th of March, so the issue about it not being employment land at that point in time is resolved. But there were at that point in time, and up until the point of sale, rights of way across the sale land that meant we couldn't have sold it to anybody because those rights needed to be extinguished, and they weren't extinguished until close to the sale date, which was in 22-23. So that's the issue, I think, in a nutshell, and we're working with our colleagues in external audit just to provide some evidence to support our treatment in the way that we've treated it, and then we'll wait for a final view as to whether they're satisfied with that or not. Happy for either external audit or colleagues from finance to make any additions to that if necessary.
If it is a available for sale asset, I mean, obviously I work for a bank, but then you have to take mark to market and it goes through your P&L and all that sort of stuff in finance. So what are the ramifications of if it's an available for sale asset on the finances? Does it really change anything? It's still an asset, right? But I mean,
it's my understanding that on the balance sheet, in the classification of fixed assets, there are different groups of fixed assets, and that it's simply within the wrong group of fixed asset. So it moves from one group to another group, and we believe the valuation is correct as it stood. Thank you.
Okay, anyone else? There's just one issue I was going to raise, which is, it's mentioned in the external auditors report as well, which is this issue of provision for credit losses with Qualis. I mean, reading the statement of accounts, it's clearly an accounting necessity to have a provision, and I then thought, well, that must be a form or whatever. The external auditor sort of suggesting it's more of a judgment, and I just wondered on what basis that judgment is formed.
I will hand this over to my learned colleague.
Yeah, we do actually commission, I'm going to duck this one slightly, but we do actually commission our Treasury Management Advisors to make that assessment each year. So they look at things like the trading position at that point in time of those companies, and they look at all sorts of other information, and they make an assessment as to what is a suitable expected credit loss. You've got to bear in mind this is as at the end of 21-22, so we're talking spring/summer of 2022. This work was done. So, and obviously at that point, Qualis was a fledgling company, if you like. So.
Yes, and obviously the issue comes up in the other accounts we're looking at later on, doesn't it, when there's a different figure there. Okay, no, thank you. Okay, if there are no further questions, we're asked to essentially approve the accounts. And as we heard, there's no need to take the second recommendation. So can I see those happy to adopt the accounts, please? Okay.
Sorry.
Yep.
With the inclusion of subject to the matter outstanding being satisfactorily resolved.
With that caveat on the issue of the land sale. And obviously we'll bring that back to the committee if any issues do come up relating to that. Okay, well thanks very much everyone for that. Which means we can move on to item 11 from pages 150 onwards, which is the audit planning report, which I think is back to Deloitte's.
It is.
Yeah.
Thank you, Chair. So if I take you to page 152, which again sets out the key messages in this planning report. So really pleased to be bringing this to the committee, setting out the scope of our work for 22-23, which is now in progress. And on that page, we set out what we consider to be the significant risks from an audit perspective around valuations, around capitalisation, and also management override of controls. We set out on the following page impact of the backstop provisions, and that's been touched on by Andrew earlier, and so also the point raised by the Vice Chair. So that date has now been confirmed for 13th of December. We held discussions with the finance team in terms of commencing the 22-23 audit to ensure that we would be in a position to progress this within the time period that we had before the backstop date became operational, and to complete our work, and so agreed a plan that sought to progress that work well in advance of that. That is in progress, and so it is reliant on progress continuing as anticipated in terms of the timetables that we've discussed, and so if there's significant delays, that can be a risk to completion and the issue of an unmodified opinion. At this stage, we are in progress, but and sharing with the finance team weekly updates in terms of where we are on any areas outstanding, any potential delays, etc. There are, as we're progressing through each week, a number of areas that we're highlighting that are slightly behind. Efforts have been made from a finance team perspective to progress that work, and so at this stage we are in a position for that to be recovered and for us to catch up on exactly where we want it to be, and for that still to mean that we conclude the audit and are able to provide an opinion on the financial statements in advance of the backstop date. And so I think it is, as Andrew touched on, key on efforts from both sides, which you know, I think we're all committed to, and so I expect that, you know, as long as that comes to fruition, that we do get to where we need to in respect of that. The document itself then details further the scope of work, further detail in terms of materiality, the detail around the risks, significant risk around property valuation, picks up the work ongoing around the disposal for North Weald, was referred to earlier, and it's I think just further on we note the work around value for money, but there isn't anything further I wanted to pick up, so I'm happy to pick up anything in terms of observations or questions from the committee, or anything further in terms of the risks around the backstop.
Okay, did you want to follow up with your question from earlier?
What's the impact if the backstop isn't met? Is there an impact on the council, or is it just on Deloitte?
So in this case, where we've got an audit in progress, if we're not able to conclude our work fully in advance of the backstop, then we do enter territory in terms of looking at a partial disclaimer opinion and looking at the areas of work that are outstanding and what impact they may have. So it wouldn't be an unmodified opinion in that regard. But so it does impact in terms of for the authority and the opinion that the authority would receive.
Thank you. And Chairman, I can't recall if this is already on the agenda, but an update in November would be great.
Yeah, I mean, I think it's something we'll definitely need to keep an eye on, isn't it? So if we just make sure that we get an update at each meeting, I think that'd be helpful, just in case there are any issues to flag up. Okay, other members, any questions or comments you wish to make? Okay, I mean, I notice on page 157, I think it is, it does say we need to satisfy ourselves that the materiality chosen is appropriate for the scope of the audit. Do you want to say a bit about why you picked the figure you do?
Chair, I suppose it's fairly standard in terms of our approach across the sector. There isn't anything specific where we've needed to make adjustments because of any particular issues at the authority. And so I suppose you can be assured in that regard.
Okay, well, if there's no more questions or comments, thanks very much for presenting that and leading us through it. And we can move on to the Treasury Management Outturn report, which I believe is you. Oh, no. Oh, which is Chris.
Thank you, Chair, and good evening, members. Item 12, then, the Treasury Management Outturn report for 23-24. This was rolled over from the cancelled meeting in, was it June or July? I forget now. But the report on pages 177 to 190 of your agenda this evening presents the outcome of the Council's adopted Treasury Management Strategy for 23-24. So that was adopted by full Council back in February 2023 in this case. And so turning to the highlights of the report then, borrowing, which is summarised on table 3, page 183. The year-end borrowing position as at the 31st of March 2024 decreased to 253.1 million compared to 281.6 million at the same stage in 2022-23, with all of the outstanding balance representing long-term borrowing owed exclusively to the Public Works Loans Board or PWLB. And turning to investments then, treasury management investments, first of all, which are summarised in Table 4 of page 184. The year-end investment position as at the 31st of March 2024 increased significantly this year from significantly to 43.9 million compared to 14.1 million at the same stage in 22-23. That balance included 21.5 million held in money market funds and 19 million held with other local authorities. I'd like to take those 2 points together. So reduced borrowing and a significantly increased investment balance, of course, reflects the large capital receipt that the Council received in respect to the North Weald Airfield land disposal in December 23. Turning to non-treasury investments then, the Council's non-treasury investments are set out in pages 185 to 186. Commercial property investments are presented in Table 6, showing a closing balance sheet value of 156.2 million compared to a corresponding value of 148.5 million at the same stage in 22-23. Overall net income from the commercial property portfolio in 23-24 was 8.6 million, which is marginally down compared to the 8.8 million achieved in 22-23. This was mainly due to a fall in income from the Council's industrial units. There were 4 properties demolished for redevelopment, and there was a further 4 vacant units at the year end. I'll cover the service and commercial investments in item 14 of the agenda, Chair, if I may, but I'm happy to take any questions if anybody got any burning questions in that area. Finally, to finish off on compliance then, in terms of compliance, I'm able to provide Section 151 assurance that the Treasury Management activity undertaken during the year fully complied with the 2021 Treasury Management Code. And finally, I'm also pleased to confirm that full compliance was achieved with the prudential and Treasury Management indicators included within the strategy, which of course, should I say, cash as at the 31st of March, well above normal levels for the reason described. Happy to take any questions.
Thank you very much for that. Impact of land sale has become a bit of a theme with items tonight. Members, any questions or comments? Councillor Owen.
Yeah, firstly, it's great to see the debt going down and the projected direction of the debt to go down. I really appreciate that. It was kind of a bit of a technical question on the borrowing. I noticed that there were more loans to Qualis, and then it said we needed further long-term public work loan borrowing to finance it. But I thought that wasn't allowed anymore. I thought you couldn't borrow under the PWLB to use for your internal property company. Or am I mistaken? Could you clarify that?
Yeah, do you want to... Sorry, we can borrow. Sorry, the other way around. We can borrow, but only for specified purposes. So in this case, it's regeneration type loans and the various development loans. What we're not allowed to do is like commercial on lending. So we have got one loan that fits that category, but that was on lend before the new rules came in. So there's been no lending of that type since, was it 2020? I think it was that loan.
Yeah, 21 and 22, I think.
Okay. Any other members? Okay. I mean, it's probably a positive thing, isn't it, that the sort of treasury management strategy was really flexible, that it could adjust to the sort of change in circumstances of suddenly having, you know, lots of money to invest as opposed to being mainly about lending. I was interested, I mean, Arling Close, I notice, are still recommending relatively short-term loans. And I'd never suggest we didn't go by that advice, given issues where councils haven't taken the advice and run into trouble. But I mean, to what extent does that sort of limit our ability to get the best returns?
I think it's important to point out that advice has changed over time. So although we've got a large portfolio of long-term borrowing, most of that borrowing was actually taken out back in 2012 as part of the self-financing arrangements when the council bought its way out of the former sort of housing subsidy system. So interest rates and the Treasury management advice have changed over the years, and that was the advice back in 2012. So our predecessors followed that, and along with all other councils who are in that position, should I say.
The point I was sort of making or asking about was being able to lend only on a short-term basis rather than a long-term basis must sort of limit the council's opportunities a bit in terms of how it deploys, its investments.
Talking about borrowing, lending. In terms of lending, yeah, I mean, but the council sort of would lock itself in, and we've got prudential indicators not to commit to long-term investments.
I mean, it's part of that risk management strategy, really. I mean, I think we're ultra cautious these days about investments and who we invest with, particularly kind of following some of the banking uncertainty that we'll call it generous, maybe. Icelandic collapse of 2009, and since then, local authorities have been much more conscious about how long they lend for, giving or bearing in mind, of course, counterparties' credit risks can change over time. So long-term investments have a heightened risk, I suppose, of them potentially going wrong. So I think because local government is so much more in that space now of making sure that it's kind of focused on reducing risk first and return second. That's why we tend to group for shorter-term investments, and it depends upon the stability and the financial health of the organisations we're lending to, hence our categories in terms of who we lend to, for how long and how much.
Okay, if there's no further comments or questions, we're just asked to note this report, but also pass comment for full council. I mean, I suppose the main comment, unless anyone wants to add anything, is just noting the reduction in overall debt as a result of the capital receipts and the way that sort of changes the changes requirements for the council. Are we okay with that? Okay. So our next item is item 13, the draft statement of accounts on page 191. And I assume you're going to take this? Yeah.
I'll lead on this one, thank you, Chair. And firstly, I think an apology actually to all of the members of the Audit and Governance Committee. There was training earlier in the week that said it's not normally focused on finance, but this agenda is particularly heavy with financial items, and, partly by dint of timing, I think, more than anything else. So you've got a long stream of financial reports. The 2023 draft statement of accounts are those that have been prepared and will be subject to external audit. This is the first statement of accounts that will be audited by Ernst & Young as our new incoming auditors. And we're very as has been mentioned previously, I think it would be very interesting to hear their perspective. I have been talking to the audit partner who will be looking after Epping Forest. But again, I think the audit committee should see that individual and hear from them. Firstly, I think it's important to note that we published this draft statement of accounts on the 31st of May, was it?
28th of May, actually.
28th of May, which again, I think we need to contextualise where the local government audit market is really, or audit places have been for many years. there have been enormous delays in producing accounts, and some councils are still, in the space of trying to produce their accounts. And yet our finance team managed to produce a set of accounts 3 days before what used to be the statutory deadline. I think that's going to move out in time now to the end of June, I think it is, reflecting the increased complexity in terms of producing statements of accounts now. So I think that's I think it's a big achievement, and I think it needs to be recognised personally. Of course, they are draft and they will be subject to audit. Key messages, I think, in the statement of accounts, and again, back to the theme of impact of the North Wales sale transaction. The financial position was heavily impacted by that, really, or heavily improved by that, should I say. We were running a forecast deficit, quite a large one, during 23-24. In the end, we managed to report a small surplus on the general fund. HRA performed in line with expectations as well. But because of the extra capital receipt and the interest that we earn on it, that our position was much improved as a result of that. And that will have a bearing, I think, into future years as well, as you would expect. Probably, unless my colleagues in finance want to make any other points around the draft statement of accounts, it's for your consideration. But you're not really being asked to approve it at this point in time. That will be, you'll get a formal request to approve it after the external auditors have completed their work on this. So it's the recommendation to note. Draft statement of accounts.
Did you want to add anything? Okay. Yes, I was going to comment on the timing of this. I mean, I do think we do need to recognise the fact that it's no mean feat to get all this information of what now group accounts, not just authority accounts, ready by the end of May. So thank you for that, and we appreciate the work that's gone into it. Members, was anything people wanted to ask about the content? Yeah.
Yeah, just a quick question on the use of the funds from North Weald. When I was looking at it, I got to like 54 million of sort of cash. Is the rest been essentially passed on to Qualis for them to go and make return?
Yes, I'll cover that in the next report. That comes through in the table in the Quarter 1 report. So.
I think there's a distinction between having spent it and having used the cash. So, I mean, the council had borrowing commitments, and I think Chris will allude to later on, really. We already had established borrowing commitments that we planned to take as part of our capital programme commitments. But there's little point taking new borrowing when you're sat on a whole lot of cash over here. So sometimes we use that cash in lieu of that borrowing. But that's not the same as actually spending the capital, because if we ever need that cash to spend on something else, we can take that borrowing at a future point in time, and that will free up the cash that's in the council's bank account to apply to some other future council commitment.
Yeah, no, I get it. I guess we lose the liquidity though, right? So when we give it to Qualis, we can't just go to Qualis and call it back, right? So they've gone and invested it. So what would be the process, say, for whatever reason we ended up in trouble? Is there a mechanism for us to go to Qualis and say, repay? Or the loans, obviously, I assume not, and we're just stuck and we have to go get it elsewhere, right?
I think, yes, the loans to Qualis are structured around or governed by a contractual agreement, so that there are the conditions in there about how quickly they can be recouped or recovered from Qualis, should the council wish to exercise those, of course. But in terms of, the council can always borrow to deal with liquidity issues for itself if it needs to. So that would be, if we are unable to get cash back quickly, then we can always borrow from the markets instead.
Sorry, many questions on this. If Qualis for some reason was sitting on a lot of liquidity, so they hadn't spent it, is there a mechanism to lend it back essentially? Or is there a lot of pressure put on Qualis to deploy the capital to increase IRRs, etc.?
Sorry, Chair. So I think that they're not actually sat on large amounts of cash at the moment, but I think, you know, once they start selling some of Springwood Grove behind us here, they will generate large amounts of cash. And there's a choice at that point in time in terms of, you know, we've got onward investment into new assets or new schemes, or to repay some of the existing loans. And there are facilities for them, or the agreement does allow for them to repay those loans early. I think that's one of the conversations we'll be having when that situation arises. What's the next thing to do? But I think that's in the space of, you know, Cabinet Council in terms of future financial direction for Qualis, and that'll be wrapped up within the business plan refresh that we see for Qualis in the next few months.
Okay, I mean, I suppose one of the things it does do, we sort of touched on this a couple of meetings ago, is a bit of flexibility about funding the capital programme, doesn't it, in terms of do you fund it from capital receipts or fund it from borrowing, and the balance between that. Other members, anything you wanted to? Yes.
Just for my understanding, really, in the housing revenue account, there seems to be a bit of a, percentage-wise, a bit of a journey on the bad debt provision from last year to this year. A bit of context for that would be useful.
My colleagues like to answer that question, please.
On page 263 on the housing revenue account, the bad debt provision has had a bit of a percentage journey from last year to current. Just for my understanding, it'd be useful to understand the background for that.
Sorry, we're talking about the 20,000 credit in the year. I'm afraid the HRA accountant isn't with us tonight. However, what I would say is that will, the contributions to and from a bad debt provision will fluctuate from one year to the next depending on the actual debt outstanding, and sometimes that results in a credit rather than a debit. But I'm not familiar with the exact details in this case, but as a general rule of thumb, a credit is not unusual.
Yeah, I think we'll check back on the actual value of debt outstanding, but I'm assuming on the, you know, that we've been more successful in collecting tenants' arrears over that course of that year. So, you know, the actual amount of provision for bad debt needs to be lower, or can be lower than it was historically.
I mean, I think bad debt does come up as a bit of a theme in several reports in the agenda. I mean, it's mentioned the 21-22 accounts as being quite a big variance. I notice it's one of the things on the audit list that we're looking at later. So, yeah.
I think it's something that we're aware of, and Chris particularly has got the bit between his teeth in terms of chasing up our performance on debt collection. That there are multiple streams of debt that we have as a council. There's just general fund debts for services, commercial rents, then there are housing revenue account debts for rent collection, then we've got council tax, of course, and business rates arrears as well. All of those are managed generally in a function, and we've challenged some of our own internal performance on debt collection in the past, and it's a focus for internal audit as well. I think I've looked at it recently. So, but we are, I think it's fair to say that we're not complacent, and we feel our performance could be better in that area, and we're giving it some attention.
Okay, anything else on the 22-23 accounts? So we don't need to make any decisions at this stage. We will see this again, so we'll just note it for the moment. Thanks very much, everyone involved. So we can now move on to back to Treasury Management, Quarter 1 update. Presumably it's Mr Hartgrove again.
Thank you, Chair. Item 14 then. This is the Treasury Management Quarter 1 update report for 24-25. So I won't go into huge amounts of detail. This covers the same ground that I was talking about 15 minutes ago. But members may recall considering the Treasury Management Strategy for 24-25 actually back in February 2024. So this is the this year's strategy. and that was subsequently adopted by full council in February. This report is presented on pages 301 to 314 of the report pack this evening, and provides the Q1 position. So the report also considers how the council performed against Treasury management indicators. Turning to the highlights then again, borrowing, Q1 borrowing position as at the 30th of June. In this case, but bearing in mind it was only 3 months, a period we're talking about, further reduced only by a fraction though on this occasion, which reflects the repayment of principal on existing loans. We didn't take out any more loans during that period, and that's just the repayment of principal. I would stress that the majority of our loans are maturity loans, which is why it reduces slowly in this case, and you'll sometimes get step reductions as loans mature, but there's been none in this period. Treasury management investments then on table 4, page 308, the Q1 investment balance as at the 30th of June was reduced from 43.9 million to 31.1 million compared to the position as at the end of the last at the end of 23-24, and 12.5 million that was held in money market funds, which represented the single largest area of investments. So turning to non-treasury investments then, and beginning at the bottom of page 308, service investments, and this was raised a short while ago by Councillor Owen. The loans that we grant to Qualis are presented in table 5 on page 309. The council receives a margin on this, as you know, and they're captured within the classification of service investments, as well as home assistance loans. There's a small amount there for that, but overall service investments increased by 4.3 million in Q1, up from 64.7 million on the as at 31st of March 24. To 69 million as at the 30th of June 2024, which primarily reflects the further drawdown of development loans taken out by Qualis. Commercial investments then, an analysis of the council's commercial property investments is presented. I covered these in more detail in the 23-24 outturn presentation earlier, but suffice to say it's been a good start to the year, especially with shops and industrial units performing well. Commercial loans then, I mentioned earlier, and these are presented on page 310, table 7, just for the sake of completeness. The council does have a single commercial investment loan outstanding to Qualis, and it's a 10-year maturity loan that was granted in September 2020 for £30 million, and due to the nature of maturity loans, the balance outstanding remains static at £30 million. And finally, compliance. Once again, I can confirm that and provide assurance that Treasury management activity undertaken during Q1 fully complied with the Treasury Management Code. And once again, I'm also pleased to confirm that there was full compliance achieved with the prudential and Treasury management indicators included within the strategy. Happy to take any questions.
Okay, thank you very much. Members, are there any questions? Councillor.
It doesn't really answer my question from earlier, though. We seem to be burning cash. So investments are going down, borrowings kind of flat. Okay, sometimes it goes down, but not as much as the investments. I think I'm missing like 20, 30 million. Is that gone to Qualis? That's the bit I don't see, because it looks like it's only gone up by 4.5 in Q1.
We haven't borrowed on the capital programme either, so you know, the council's capital programme, we haven't needed borrowing, so the funding of the new leisure centre in Epping, for example, has been done without taking out any further borrowing so far this year. It's a combination of the two. I do apologise, I didn't give you the full picture earlier. So.
Okay, anyone else?
So I'm conscious that there's a kind of a plethora of Treasury management reports on the agenda, and I suppose it's just worth explaining a bit about the focus on Treasury management and the importance of it, really. As you'll be aware as members of the Audit Committee, that, there have been a number of examples in recent years of councils getting into financial trouble. A lot of councils are over-borrowing for different reasons and for commercial purposes as well. And some councils getting into trouble on the back of that. Doesn't explain every council that's been into trouble their situation. It's not all to do with borrowing, but certainly some councils have over-borrowed, and there is much more focus now upon the councils explaining really their borrowing positions, their capital programmes. Because we go back even further to, as I mentioned earlier, to the banking crisis of 2009 and the Icelandic banking collapse, there's also a particular focus on making sure that councils' investments are properly looked after and properly lent as well. Risks are understood and risks are managed, and it is the role of the Audit and Governance Committee to make sure that the actions of the council are proportionate, reasonable, fairly explained. In context of what the council is trying to achieve as well, of course. So Treasury management is front and centre of the role of audit and governance, and you'll get a forward-looking report, a retrospective or backwards-looking report, and then you'll get in-year monitoring reports. So it seems to appear probably on most agendas one way or the other, and necessarily and importantly so. Thank you, Chair.
Thanks for that. I mean, this is a forward-looking question rather than looking back at Q1 question, but it relates to the Qualis sort of loans and picks up. Obviously, we've seen the reports to Cabinet about the delays on some of the construction projects and so forth. Are we confident and happy that the payments due to the council in terms of interest payments and so forth are all due on time and secure on that basis, or is there any prospect of looking to renegotiate any of that?
I think all payments to date have been made. I think there are, as you highlight, Chair. I mean, the issues around some of the developments and delays around that create cash flow shortages. I think it's something that we need to look at quite closely at the moment. But nothing will be done, I think, around that without coming back to committee with an explanation of current situation, what the remedy is, and context around the overall position. So for now it's okay, but I think we need to keep a close eye on it.
So there's an internal process in place which keeps an eye on that?
Yes, exactly so, Chair.
Right, well, again, we just need to note this Treasury report. I mean, it will go to Council like the other ones. I don't think there's a big comment to add to this one, but thank you for your questions. So we move on to the annual report of the head of the internal auditor, the head of internal audit. I think that should probably be. Over to you.
Thank you, Chair. I'll guide you through the report, and this is a really important report because it feeds into the annual governance statement, which is also on the agenda. So I'm required each year to give an opinion on the governance, risk management and internal controls of the council. So I take you straight towards the bottom of page 316. And it says there, based upon the results of work undertaken during the year, it is the head of internal audit's overall opinion that the council has adequate and effective governance, risk management arrangements and control processes. Where there have been significant issues, these have been accepted by management and properly corrected. And that's the highest accolade I can give. I have to be very measured in my terms of words. So the rest of the report just backs up how I've come to that opinion. So if I take you down to the top of page 318, so there's a list of all the reports that we've issued this year and their assurance rating. So we've got no limited assurance reports, and that's really good news. 2 of them were substantial and 4 of them reasonable. So you may ask, as an audit committee, but Sarah, you've only done 6 audits in the year. So we don't just do audits. We're very busy giving advice, being on project groups, being on officer groups, and undertaking investigations. So the number of reports this year is slightly down, but we did have 3 investigations, and they do take a lot of our time. The report talks about the tracker process, and Sue will talk about that in the progress report coming on later. And again, at the bottom of page 318 is about those other assurances. So Appendix A sets out all the work that we've done throughout the year and our findings. I won't go through that, but it just shows you it's the widespread of work that we do, so I can give those assurances an opinion at the end of the year. It's important that you have an effective internal audit function, and so we as internal audit have to be externally audited every 5 years. That was undertaken in 24, and it came to the audit committee, and we were fully compliant with every aspect of the public sector internal audit standards. Now, the standards for the Institute of Internal Auditors is changing. They've got new global standards coming into play, and for the UK public sector they will be in place for April 25. So at the moment, I'm working through to work out what needs to change processes-wise, methodology-wise, whether there's new requirements of the audit committee, and I will feed that back to you as I get to grips with that. Also, to make sure that we are an effective internal audit function, we have some KPIs there, starting on the bottom of 319, page 319. So the indicator that we haven't hit is the getting management responses within 10 working days. Some of our audits are actually quite complex, and it's important that we work with management to agree recommendations, and therefore sometimes it takes longer than anticipated. But that way we get better buy-in, they own their recommendations, and hopefully they will implement them within the agreed timescales so they don't end up on the tracker in the progress report. Happy to take any questions.
Thank you for that. You certainly anticipated one of my questions about the change in number of reports. Do members have any other questions or comments on the report? Yeah.
You mentioned that you'll be doing the assessment against the new standards. Will that include an assessment of the new code of practice for the UK as well?
That will be taken into consideration as well. Because we're public sector, we're going to wait for the guidance that's going to come out from CIPFA, the Chartered Institute of Public Finance and Accountancy, because our standards will be slightly different from the global ones, or they're going to enhance them. They're just about to go out to consultation, so I'm not quite sure, but I'm sure that would all be captured together, but I am aware of what you're talking about.
Yeah, because I believe it's been recently issued for the UK. They've grouped together for public sector and all of the industries now, so it'd be useful to see a comparison there as well. Sorry, Sarah. On the, and maybe we'll get to this on the tracker, so just tell me if it's up for later, but in Appendix A, I think it was, there's quite a few audits that have been deferred. Any particular context? Is it risk-based decisions? Yeah.
So that came to the audit committee in March with the reasoning for that, and we got approval from the committee about deferring them. It was mainly to do with other work taking precedence and on a risk basis, and was I getting my assurances from elsewhere? Most of them have been deferred into this year's audit plan.
Thank you.
Just one from me. I'm picking up on your comment about management responses to draft reports. I mean, it does seem more important to me that we get a good response that's then implemented quickly, rather than a poor quality response that then sits on the tracker for months and months, and potentially that's a performance indicator worth looking at to see whether that needs flexing in the future, or perhaps a quick response for high priority recommendations, but accept a longer response for medium and low priority recommendations. I don't know if others feel differently, but that might be something to consider.
So we are aware of that, and we talk about that in our team meetings. And was that just due to an outlier? I think there was just a couple of reports there that did skewer the figures there. But yeah, we want to turn around things as quickly as possible so we can get things moving, but to make sure we get that quality response as well at the same time.
Okay, so I think we are asked to note this and the assurance level given. And do we concur with the judgment of the internal auditor? Can I see those in favour, please? Okay, those are signs of assent, so that's agreed. Thanks very much, everyone. We move on to agenda item 16 now, which is a draft annual governance statement. So I'll hand back to you.
So I'd just like to make it very clear that the annual governance statement is not my document. It's the council's document. I just hope to coordinate the process. At the operational level, we get service managers and directors to fill out a compliance checklist, so they self-reflect on whether their governance arrangements are working well within their service areas, and then we make sure as internal audit that concurs with what we know about the organisation and through our audits as well. So the annual governance statement goes with a statement of accounts, and it is scrutinised by the external auditors as well as any other external bodies who want to look at it. I'd like to take you to page 344. So we do review the effectiveness of our governance arrangements, and then under item 4 there we have an opinion that we come to, and that's so that we do have a sound governance arrangements in place for this particular year, which tends to be the same thing that we say most years anyway. But underlying that is that we are aware that things are changing and things that we need to keep an eye on. So if we go to table 1, which is on the bottom of page 347, they were the previous governance issues that we were looking at from the previous annual governance statement, and that where we've taken action and what we've done to make sure that that is completed. So I won't go through that because most of those we have signed off. So table 2, which is at the top of page 350, are those issues that we're going to look at this year. So not what we call issues. There's nothing really major going on that we need to be worried about, but things that we just need to keep an eye on, have a focus on. So we've got our new waste company starting in November, and we just need to make sure that our governance arrangements are fit for purpose. And we actually have that on the audit plan for the following year to make sure that those are working as intended. We are aware that our financial regulations need bringing up to date, and we're going to do some work on that, and some work around the financial management code just to prove to ourselves that we are following SIP for good practice guidance. The Procurement Act was going to go live in October this year. It's now been deferred now to February next year, but we need to make sure that we got our processes in place, that we got our authorisations, and that we're complying with that particular act. The council, as all councils do, we need to make sure that we put on our website the data that we have to do according to the Transparency Code. We are aware there's a few gaps in that, and so we've got a working party to make sure that we get that up to date. And then from our service assurance statements, which are completed by the service managers and the directors, these were the common themes that were coming out of there. So we just need to be smarter on our declarations of interest and gifts and hospitality. This is for officers, not for members. And we're just looking at having an electronic process for that, because that just makes total sense and we can track it better. There was some noise around data and decision making and performance monitoring, so we've been developing our KPIs getting much smarter with our data, making sure it's working for us, and we just need to continue on that journey. And then at a much lower level, there's some more work that needs to do around training and awareness. Happy to take any questions.
Okay, who'd like to ask questions or comment on this? No. Can I just raise one thing? I understand why the Terra Verde is in there as a new entity, but I mean, in governance terms, it's an increasingly sort of complex landscape overall, with some things outsourced to wholly owned companies, and you've got one chain of decision making and sort of shareholder relationships. You've got shared services with a different governance model. You've got straight contracting, sometimes with companies you own, sometimes with companies you don't. And I suppose partnership bodies like Neppens and what have you. And I wonder if at some stage we need to make sure that there is a thread of accountability for all those things, or a clear sort of governance mechanism, so things don't sort of fall through the cracks, or that's because I've not sort of fully formulated that, but it just sort of looking at Terra Verde as one example, it just struck me how complex you can no longer. It is not as easy as it sometimes was to say, right, that person's in charge of that and can sort out the problem. You've got this whole web of relationships which can make it quite difficult to work out where the accountability lies, potentially.
I think that's a really fair point, and so we've got various mechanisms within the council to make sure that. So we're moving towards more shared services, and we have a shared service board being set up for that. Something like the parking, the NEP, is that we have somebody on the board there to make sure that the interests of the council are being protected. So there is a whole mechanism already in place, and then internal audit will pick out where we think things are particularly risky and then look at it.
Yes, I mean, I'm not suggesting that you alter this or anything. I'm just sort of thinking for the future. But I mean, there's a step beyond. We have arrangements in place, but I mean, are they effective? If we've got board representation, is that then reported back when there are issues which have wider impacts on the council? That sort of thing. It seems to me has a potential to need some attention at some point. Should I have my mic on? If there's nothing else on the governance statement, we've reviewed it, we've commented on it. Do we actually need to agree it? Or just note and comment on it? Okay, we have done those two things. So we can move on to the corporate fraud team annual... Oh, no, we can move on to the Audit and Governance Committee annual report. Over to you again.
Thank you, Chair. So we don't actually, there's no regulation to say that we have to produce a report of an annual report of the Audit and Governance Committee, but it is in line with good practice from CIPFA, the Chartered Institute of Public Finance. I think it's a really good read for anybody who doesn't understand about audit committees. It sets out all the great work that the audit committee does and the wide remit. I think people always think, oh, it's just about the finances. It has been today, but there's so much more, and it's a really interesting committee, I think, to sit on. As part of good practice, we like to, as a committee, review the terms of reference. That starts on page 352 about they follow the model ones from CIPFA, and we've reviewed them, and there's no changes proposed this time around. So the rest of the report goes on and talks about everything that the Audit Committee does, but I'll draw you to page 358 where we talk about the Audit Committee effectiveness. So we actually had an in-person workshop to review the effectiveness of the committee, what worked well, what could be improved, and there was a little action plan that came out of that. And my intention is to, with the Chair's agreement, is to run that effectiveness workshop again. It will be an in-person one, but later in the year when the new audit committees have got used to the way of working. So, thank you very much.
Okay, so it's primarily a factual report. Did members have any comments or things? Yeah.
Just a question, if you don't mind, Sarah, on the terms of reference. I couldn't see anything about quorum. Is that covered there or in another document, or did I just miss it altogether?
The quorum is covered in another part of the Constitution. This is a small part of another 400-page document, and it's for this committee it's 3.
Okay, well, if there's no further comments or questions, we're asked to agree it and refer it to full council. And can I take it you've noted the terms of reference? Thanks very much. Right, we now move on to the Corporate Fraud Team Annual Summary. Thanks for being so patient, and over to you.
Thank you, Chair. This report is for noting, and it summarises the key activity of the Corporate Fraud Team for the year 23-24. I don't propose to take you through every single bit. We just focus on the general overview of the activity during that year. Total of 32 new investigations were opened, with 23 investigations during that time being closed. The summary of the types of fraud you can see in the image, the graphic there, but it's no surprise that the majority of the activity that the team has focused on this year has centred around tenancy fraud in all its various forms. Of the 23 investigations that were closed during the period, 12 of them were closed as a form of fraud either being detected and or proven, which equates to 52%, beg your pardon, of those closed investigations being actually successful in finding some element of fraud. For those members who've been on this committee previously, you'll note that the amounts in terms of the number of files or number of investigations are significantly lower than previous years. This is primarily due to reduced resource within the team. However, due to a revision in working practices, the amount of positive outcomes remains on par with previous years in terms of the amount of success and fraud proven percentage-wise. Notable examples, as I say, we focused heavily this year on tenancy fraud. As usual, we focus, as you know, on 100% of right to buys. 25 right to buy applications were received by the council during this year, with 11 of those either stopped or withdrawn. Which again is on par with our usual success rates in that area. In terms of the right to buys that were stopped or withdrawn, this represents approximately £1 million worth of right to buy discount that has been stopped being applied or claimed. And also, as these purchases didn't go ahead on these 11 properties, they continue to provide significant revenue streams with the form of ongoing rent payments, etc., which is calculated to be worth approximately £500,000 to the council going forward. Various activity within tenancy fraud, breaches of tenancy, misuse of tenancy, sublets, fraudulent housing applications, etc. We've also been active in working and assisting with other service areas such as finance, IT, HR, colleagues in internal audit, and also we assist in environmental health during the year with quite a complex investigation into unlicensed HMOs. That was successful, with the owners of the company involved in the issue having been issued fines totaling around £100,000. Just moving forward, that's pretty much what we've been involved in this year. Just to bring the report up to date, at the time of writing, as you can probably see, we were undergoing an internal investigation, or undertaking, I should say, an internal investigation, which has now since concluded. Happy to take any questions on this.
Okay, yeah.
What's the, so thank you for that. It's sounds like it's been a very busy period. What's the relationship between the fraud investigations and the control framework? Do you pick up and the cases kind of feed through to you because the controls are working? Or are there other inputs? And what has been the outcome in terms of the control framework as a result of the fraud reviews, if any?
In terms of the referrals, the work that comes into us, it comes from all areas. It comes from internal. Sometimes internal is as a result of control networks that are in place. As you can imagine, sometimes things emerge where it's a result of perhaps those control networks not being in place or not being adhered to primarily. We also take referrals from members of the public as well. So it's a broad spectrum in terms of where our work comes from. Most of it, if not all of it, comes through to us one way or another in the terms of a referral, and that's what we work on.
And to what extent would you say there's been a need to enhance the control framework based on the results of your work?
Based on the results of the investigations we've undertaken this year, there hasn't been much call to undertake sort of or enhance control frameworks, because most of those, the frameworks have been in place, they've been adhered to. It's just like with any fraud, there's always ways to circumvent that. One specifically that we were involved with was the issue regarding a potential phishing fraud, and that did pick up some control issues which have been amended now and enhanced and put in place.
Thank you.
Councillor Owen.
I'm going a bit off-piste here, and it might be a question for Andrew Small, but there was a fine of 100,000. Does the fine go to the council when we fine people for these types of activities on the HMOs? Because I remember there was a case I read about in the local rag recently about the chopping down of trees, where the fine then ends up not coming to the council. I know we were awarded costs in that case, but had we not been awarded costs, are there cases where we build up quite a lot of costs, but the fines don't come to us?
In terms of that particular one, it is my understanding that those fines are payable to the council. However, what I can't say is hand on heart that that is the case. It's my understanding that it is, but I can certainly verify that and to give you an actual proper answer to that.
Only I think that there are different circumstances, as you say, that the fine for the for chopping down trees went to the courts, and we will get our money back in terms of fees, court fees. But I think it depends upon the nature of the offence as to whether we keep any of the proceeds from prosecution.
Thanks. I do think the report shows very effectively the sheer breadth of activities you can and do get involved in, even if housing is the biggest proportion. Can I just ask, at the beginning you said you were doing, as I understood it, fewer investigations but a similar rate of successful investigations. Is that because you're sort of weeding out the ones with lower prospects of success, or what are these changes in working practices that you referred to?
Yes, you pretty much hit the nail on the head. And what we've done is we've refined our, if you like, vetting processes in terms of the referrals that come in. So rather than concentrating on a quantity basis, we've embarked on a more intelligence-led and risk assessment process in terms of looking at those referrals and looking at the ones that are better quality, the ones that are more likely to bear results.
Okay, thanks for that. I suppose what we'd get anxious about is if it got to the stage where, we're going for the, the easy wins, as it were, and essentially those who are better at covering their tracks or, a bit more, clever about the way they operate, found it then easier to slip under the radar. Is there any danger of that?
What I would like to stress is that although the ones that we open, we don't discard any referral that comes into us. So just because something may not hit the threshold in terms of a risk assessment on that particular occasion, it doesn't mean that we disregard it. We can, and we often do, go back to those referrals. So hopefully that way, nothing that comes into us slips through the net. With the best will in the world, we're not able to look at literally 100, or investigate, I should say, 100% of every referral that comes into us for various reasons, but we do look at and we risk assess 100% of those referrals. As I say, the ones that are tangible, the ones that may not, as I say, meet the threshold straight away, they are put essentially on a back burner, and we can and we do revisit those during the year, or subsequently even sort of in further years.
Thanks very much. Anything else on that? In which case, we just need to note that, and we can move on to the internal audit progress report from pages 370.
Thank you, Chair. So I'd just like to take you through fairly quickly the progress report. The first part just covers the progress against this year's approved audit plan and gives brief summaries of the final reports that we've issued. If I take you to the recommendation tracker, which starts paragraph 3, so all of our audit recommendations are added to the tracker where we can monitor them and make sure they're implemented. I think it's also worth noting that where we have carried out investigations, because sometimes we work jointly with corporate fraud, any control weaknesses arising from that are also added to the tracker and monitored to make sure the control frameworks improved on those as well. So they're all added to the tracker, they're all monitored. The audit committee receives with every progress report the detail of any overdue recommendations, and actually all high priority ones. So at the moment you can see in the table on page 373 that we've got 9 overdue items. There's one high priority one which relates to it's a big piece of work around reviewing the service level agreement that the council has with Qualis Property Solutions, who provide our housing repairs service. And so that has slipped a little bit. And in fact, 5 of the other recommendations included it within that 9 are concerned really or linked to the review of the SLA as well. So what I would say is these are being monitored. The Qualis ones are also being overseen by our Chief Operating Officer, and we've got no concerns about that. There really are a lot of action has been taken on those. The details provided in Appendix 2. And the end of the report really just gives you a brief outline of some of our other activities and the activities of the corporate fraud team. So I'm happy to take any questions.
Are there any questions? No. I mean, you highlighted what jumped out to me, which is the number of recommendations which related to housing repairs. So hopefully when we come back to our next meeting, we'll see far fewer. Okay, well, that's for noting. And we can move on to the final report of the night, which is risk management, which is down in your name, I think.
It is. Thank you, Chair. So this is a standing report that comes to every meeting of Audit and Governance. An important function of the audit committee is not just to look at the control framework, but also look at the council's risks and to make sure the council is aware of the risks that it faces. There are two tiers of risks. There are operational risks, which are held in all service risk registers, and then there are risks which we class as sufficiently significant to be corporate level risks, and they are presented on the corporate risk register, which is in front of you this evening. The cover report highlights, I suppose, for your information, the movement or the change in risk threat or risk level, I suppose, for the main risk the council faces, but the detail is within the appendix to the report. I'm not going to go through all of them. I think they're available for you to look at, but just to highlight, the largest risks and the most severe risks facing the council are identified as cybersecurity risks, and that's, as you're probably all aware, that the threat of the council systems being either hacked or taken down would be severe for the council, and because there's so much, so many attempts these days to try and gain access to councils or any public sector body systems, I think we can't be complacent about that risk for us as a council, and put quite a lot of time and effort into making sure that we test that risk on an annual basis, penetration testing to make sure to see externally sourced, to see whether people can gain access to our systems, whether our controls and firewalls are adequate or not. But that is one of we perceive as one of our greatest risks. The other red risk at this moment in time is the quality of our planning decisions. The elected members of the council will probably be aware that we've recently made some changes to the structure of our planning committees to try and address this risk. I hope that when that embeds and becomes normal practice for making planning decisions, our risk in this respect will go down. But the risk is if we don't meet the government's targets for quality of planning decisions, particularly on majors, then we may lose our right to make those planning decisions, and we lose those to the government's planning inspectorate. So, I think because it's important to all members of the council and all members of all residents of the district, we highlighted that one as a significant risk as well. The other risks in there are, risk of being able to balance the budget, risk of our Qualis, our commercial company, delivering, risk of the waste internalisation of the waste collection service running smoothly, are all balanced. They're all reflected on as high level on corporate risks, because these were all the things that if they went badly wrong would affect us in terms of either financially or reputationally, and therefore rightly so should be on this corporate risk register. At that point I will stop, Chair, and ask if there are any questions.
Okay, so not a lot of change in this since the last time it came to the committee. Were there any questions that people had on this? Yeah.
Yeah, just for my understanding as a new member, it'd be really helpful to understand on the cyber risk in particular, because it's so high. Is your expectation that once those actions that are listed here have been implemented, that you'll get it down to a level you're comfortable with?
It's a good question. I think our view at the moment is that because cyber threat is constant and and such a high risk, I think we've seen there are examples of councils that have lost and been locked out of their own systems. I think we're probably minded to keep it as a red risk, to keep it, to keep attention and focus on it. But we have, outside of this forum, I'll talk to you about an incident that we had. We put a lot of time and effort into making sure that our controls and systems, firewalls, are robust as they can be. But I suppose we're always aware that there are some very clever people out there, and that risk is really hard to eliminate completely, I think. So I think we're going to keep it high for the foreseeable.
Thank you. And just as a follow-up, if I may, there's a reference to a Microsoft audit. Is that something that the internal audit team will be doing, or an external body?
I think, I think this is an audit being done by our our ICT team of our systems, our licenses, and arrangements with dealing through with Microsoft.
Yeah, and I understand, slightly kind of separate, but I understand that we're being asked to opine on the risk register and the ratings. In order to do that, I'd find it really helpful if there's any additional information around the impact thresholds in particular. So how do we define negligible versus very high? If there's anything sitting behind that, I think that'd be really helpful. And also if there's any risk appetite statements that we could have, that'd be great. Thank you.
There is a document, isn't there, somewhere that sets out how we categorise risks, thresholds, and so on, and severity that allows us to conclude which category they should be in, mitigated and pre-treat and pre-mitigation as well. Is that not on the agenda at the moment? I think it has been in previous committees.
We will include it in future ones. We used to. I think we've dropped off. But on the risk appetite side, we haven't done that piece of work yet. Obviously, risk management is an evolving process. We've got our corporate risks in place now. In the last year or so, we've been concentrating on service risks. Risk appetite is next on our agenda to look at.
I think it's a really interesting area at the moment. Risk appetite has changed a lot in local government, but then I think, to understand that properly, we probably have to look at different aspects of what we do, and our risk appetite will probably be different in relation to different activities. I think, if we go back a few years, commerciality was a big topic for local government and very in vogue, and then we've probably seen a lot of quite highly publicised issues created as a result of that, and suddenly the risk appetite has wound right back in again in that regard. And we could probably talk about just that subject alone, at some length. But every service, health and safety, or IT security, all the other things have different levels of risk appetite potentially that we probably need to consider separately, I would think. But an interesting topic, and certainly one that's very topical right now.
Thanks. On the topic of the ICT, I was pleased to see earlier on the agenda the ICT disaster recovery got a substantial audit, a substantial assurance, which I think it hadn't done in the past. So that's hopefully a move in the right direction. I also note the number of actions due for completion in September or October this year in the risk register. So be interesting to see next time what impact those have had on some of these ratings. Mm-hmm. Okay, were there any more points or questions on the risk? If not, we're asked to refer it to Cabinet for approval. People happy to do that? Okay, thanks very much. I don't believe there's any other business.
No other business, Chairman.
There's no need to exclude public and press. So thank you all very much for your participation today, officers and members. And members do remember that officers are available outside of meetings if you do have anything to pursue or take up before our next meeting. Thanks very much, everyone.